Hello, I'm James Turk. I'm a director of the Gold Money Foundation. And I'm here in Munich, Germany with Swiss money manager Egon van Greyerz, the founder of Matterhorn Asset Management. Egon, it's a pleasure. I appreciate you taking out the time to come and speak with us today. I've been following your work for many years. I know we're on the same line of thought with regard to sound money and the precious metals. But just sort of provide a little bit of background information about yourself and your thinking about gold and silver and their role as money.
Well, I can go back a long time. I've been worried about this world for quite a long time, like you, and I saw it coming, well, certainly in the 90s. I was surprised how governments managed to fool the people by continuing to print money. I thought actually that the world would discover that the emperor was naked a lot earlier than they did. But it suited everyone, of course. Everyone had a vested interest, whether it's government or the bankers, politicians, to continue to print money and to continue to deceive the people. So I founded Matterhorn Asset Management in the late 90s, but it was really a private company then, just for private investors. But in 2002, I went official and I said to all our investors that you should have 50% of your liquid assets in gold, which was quite unique. Then the gold was $300 then. Of course, just like when you started, some people listen and they are extremely happy. A lot of people didn't listen. And as you are, I'm sure, experiencing now, people like buying high. Well, I'm sure you'll come to that. I don't think we are high yet. We're just higher. We've gone 5 times since we recommended people to have 50% of their assets in gold. But we're still at the very beginning of the move, in my view.
Yeah, I agree with you completely on this. People get hung up on the price. What they really should be looking at is value. And value can be very, very different. When you're looking at price because the dollar is being debased, the euro is being debased, they're losing purchasing power because of bad decisions being made by central banks, inflation and all of that. Gold may look like it's expensive, but the reality is it's almost as good a value as it was 10 years ago. It's slightly higher value, less undervalued than it was 10 years ago, but on any historical norm, it's still very much undervalued. And even silver, given that silver's risen the way it has. Do you also look at silver as a form of liquidity?
Yes, we do silver also, definitely. And we actually also have, our precious metals division is called Gold Switzerland. We also have the name Silver Switzerland registered, but we're not using that as a separate website. But we do, lately we've done a lot of silver. Again, of course, people like to buy things when they move. As you know, it's more complicated in Europe to buy silver because of the VAT situation. There's no problem buying it and storing it in a bonded warehouse, of course, but people can't use it as money in the same way without paying VAT on it. So, in my view, silver is not the same degree of wealth preservation. It's a very interesting investment currently. I think people should have some silver. I think they should have more gold, because of the volatility of silver. And at some point, I actually see, when I see gold peaking in a number of years and staying at that level, because I think gold is going to become part of reserve currency. I doubt that silver will be, because there's no silver stock around the world and governments don't have silver. So therefore, I think silver will correct down more. So that I think investors should be careful in not buying silver only.
Yeah, I agree with you. The volatility of silver means it's not for everyone, whereas gold is, the form of international money. And that role as international money, I think, continue to emerge as more and more people are starting to say that, well, there are no safe havens anymore. It can't go to the Deutschmark. Even there are questions about the Swiss franc and how closely tied it's going to be to the euro. So the natural safe haven would be gold. Actually, let me ask you about the Swiss franc. Do you have any views on that as a safe haven currency? Well, I mean, they tried buying a lot of euros, and the Swiss National Bank took huge losses as a consequence of that on their foreign exchange trading. But how do you see the Swiss franc, going forward from here?
Well, I think it's since 1972, the dollar is down about 80% against the Swiss franc. if I remember correctly.
That's probably pretty accurate.
Yeah. And the interesting thing is then you compare all the currencies to gold. You know, Swiss franc is also down dramatically against gold.
Yes.
So as we know, all currencies are going down against real money, just at slightly different rates. So the Swiss franc has always been, as we know, a currency that people go to when there's concern in the world about the financial system. Now, the high Swiss franc is a real problem for Switzerland from the point of view of terms of trade. It's too expensive for them. As you know, they always protected or defended the Swiss franc against the euro until they lost billions and gave up that game. And now the Swiss franc is too expensive for the Swiss. And I'm concerned about Switzerland also from the point of view that they are a very strong and stable economy, but they cannot withstand the pressures from the rest of the world. So I think that the Swiss franc will continue to strengthen against the dollar. There's no question about it. I had a target years ago of 50. We're now 87 today, dollar against the Swiss franc. And my target was 50, so we still have a long way to go. But I'd much rather own gold than the Swiss franc, because I think gold will go up against all currencies, including the Swiss franc.
Yeah, in a world where the printing presses are going wild at central banks, the Swiss National Bank can't on its own really stop it. They can't buy all of these extra currencies that are being created without incurring huge losses like they did on their foreign exchange trading with the euro.
No.
It's one force is not enough to stop all of the bad money processes going on around the world. But what would you suggest is the thinking within the Swiss National Bank itself? I mean, back in the 1970s, it was quite clear that the Swiss National Bank was committed to sound money, and there was even a period of time when they went to negative interest rates to discourage people from hot money from coming into Switzerland. But back then, of course, its partner was the Bundesbank in maintaining the Deutschmark as sound money as well. But now the Swiss National Bank is pretty much on its own, because the European Central Bank doesn't really seem too committed to sound money, given the fact that they've been buying so much sovereign debt. So do you see the Swiss National Bank more or less throwing in the towel and giving up to maintain any kind of pretense for sound money?
I think they have gradually over the years, they sold off some of their gold, as you know, and then the Swiss banks used to be the most conservative banks in the world from the point of view of investments. Now they are like any international bank. They have enormous positions, and relative to the size of the country, of course, one has to be concerned about the Swiss banking system.
You mean the big banks, the
big
UBS,
UBS,
Credit Suisse, not the smaller cantonal banks or the private banks?
No, I'm talking about the big banks. Of course, they have enormous exposure, if we get a problem in the banking system, which I think we will get worldwide, the Swiss bank, the Swiss government is too small in relation to the big bank's exposure. So that to me is a real concern. If something happens to the financial system, if we have a systemic problem, it doesn't matter if you have the most conservative Swiss bank or if you have one with bigger exposure, because even the smallest banks, if they get dollar deposits, what do they do with the dollar deposits? They put it in New York. If they have a foreign exchange position with the dollar as counterparty, they have that with the US bank. So sadly, in my view, if we do get a systemic problem in the world, no bank can withstand that pressure and the problems.
Is that causing Switzerland to lose its status as a safe haven because it's now part of the global economy in a way that was different than back in the 1970s when the big banks in Switzerland were basically Swiss-focused and not globally focused?
Yes, I think it's a major change there.
Does that mean the rule of law in Switzerland is being eroded? Property rights and things of that nature?
No, not yet. Definitely not. I think, I'm a dual citizen. I'm Swedish and Swiss, so I can look at Switzerland from the outside also, not just as a Swiss. And I still think that it's one of the soundest economies and countries and best governed countries in the world still, Switzerland.
What about as a place to store metal? You know, an old friend of mine, Mark Faber, who you may know, who is Swiss, has indicated that he's less confident about Switzerland going, looking in the future in terms of confiscation issues if they had pressure brought to bear on Switzerland during a banking crisis and governments around the world, the U.S. government particularly, put pressure on the Swiss government to confiscate metals. Do you see that as a risk in Switzerland?
I know he said that, and I am surprised. It must be his influence from Thailand or the Far East that has made him think that. I think that gold in Switzerland has an old tradition of actually putting part of your savings into gold. I mean, I remember when I was a young man working in a bank in Switzerland, most people in the bank bought a few friendlies, a few Swiss coins every month for their salary to save. And so there is this old established tradition in Switzerland that for everybody to own gold was, as you know, in most European countries in the last 50 years, so no bank sells gold. Even in the UK today, you can't go into a bank and buy gold coins. Or in most other European countries. Now you've got internet companies selling it. But Switzerland has always had that tradition that you go into your bank and you buy a gold coin. And this is what this is the way many Swiss have been saving. So I think that it would be unacceptable and unlikely that the Swiss will actually ban an old established tradition of putting your savings into gold.
Is it in the culture of the way the Swiss people think?
I think it is. They have always been savers and they've always looked at gold as part of the saving.
So it's in many respects similar to the culture here in Germany where, you know, it's a hard currency country. There's a concept of saving rather than incurring debt.
Exactly.
And even though they have a younger, newer generation, those old traditions still prevail.
They do, and you still find that Swiss is very much of a cash economy, that people, now credit cards are accepted in more and more places now, of course all shops, etc., but a lot of restaurants haven't accepted them until in the last few years. And people like paying with cash in Switzerland, which is very unusual compared to the UK or the US, for example.
What's the biggest risk that Switzerland faces today, in your view? Is it the strong...
Yes, I think that's a...
Potentially, the strong Swiss franc potentially undermining or making the Swiss economy underperforming?
Yes, I think that's a big, big problem.
Does that also have an impact on the financial and banking sector within Switzerland?
I think it could do, because it will impact the country as a whole, and it will mean that the country's economy will deteriorate, and which could be also bad for the banking system.
Okay. Well, let's move away from Switzerland and look first at Europe and then more globally. How do you see Europe evolving over the next year or two, specifically with regard to the euro and the ECB?
What is so fascinating about this period that we're in now is the whole world is in a mess. It's not just the dollar. It's not just the US, although in my view that's the biggest problem, because that is the engine of the financial world and the world economy. The US and the dollar has been. But the problems in Euroland are massive. Now, but relatively, I think Europe will fare better than the US. But if you we know, I don't need to mention all the names of all the countries that are in real trouble, and the Portugals and the Spains of this world, that will move on to Italy, to France, in my view. UK is in an absolute mess, and I think after the US, they are the most likely country for hyperinflation, in my view, the UK.
I agree with you on that. I think it's a horse race. Which one's going to fall over the finish line first? And I mean fall literally, because it's not a horse race you want to win.
No, definitely not. So, and this is why, when you think about the world has never, ever had a situation where virtually every major economy worldwide is in a total mess and is bankrupt. And this is why when it starts in the US, and in my view it's starting now. Now we're actually, it is the dollar which is the trigger, and the dollar is starting to fall more rapidly now. And I think we are now going to see the first signs of this period of decline and hyperinflation starting. It will take time, but the acceleration is now at the very beginning.
You can sense a break in confidence in people's view of what the dollar is.
Absolutely, yeah.
So it will gain momentum. Will the impact be on the euro? People love comparing currencies and say, you know, which one shall I have, euro or the dollar or the Swiss franc? I said, it's a fallacy to think about currencies in relative terms, because, you know, it's always that when one currency goes down, another one has to go up. But as we both know, in the last 100 years, every currency has fallen between 97 and 99% against gold. Gold, yeah.
And, you know, Voltaire said in 1729, paper money eventually reaches its intrinsic value, which is zero. And they're on the way. All currencies are on their way. It's just a slightly different speed. So now, I think the next one to fall is the dollar against the euro. So the euro will continue to gain in value against the dollar. But currency speculators in the world will attack one currency at a time, because they can't attack them all on a relative basis at the same time. But just only thing that investors should look at is the value of currencies against gold. I said they've gone down 97 to 99% in the last 100 years, and then in the last 10 years, they've gone down 80% against gold.
You mentioned currency speculators, though, but is that really what's driving it, or is it people looking for a safe home for their money? It's been my perception that it's really people looking for safety and security with their money. And, you know, they go here thinking that's safe, or they go there thinking that's safe, rather than currency speculators itself. You know, obviously, currency speculators jump on when they see the trend going or when the momentum building. But isn't the big driver really people looking for a safe place to put their money?
Yes, absolutely. I agree with you. The big trends are always where people want to have their money.
So if the dollar falls, the knee-jerk reaction might be, well, we'll go into the euro, but the euro has its own problems.
Yes.
What people should really be saying is, look, rather than going into the euro, just go into gold, because that is the ultimate safe haven.
Yes, absolutely. And the people should only think about their wealth in relation to gold, or possibly silver, but preferably gold in my view. And of course, the Americans, they don't understand what's happening. They don't understand that, as I said, the currency has lost 80% against gold in the last 10 years. They don't understand that their stock market investments have also lost 80% against gold in the last 10 years. Because the Dow is still at 12,000 or above 12,000. So the Americans think that I'm all right. I'm not losing on my stocks. Yeah. But they are losing massively.
In terms of purchasing power.
Exactly.
Yeah, but you know, that's very understandable from the point of view that when you're within a country and you're getting paid in dollars and you're using dollars at the gas station, the supermarket, you sort of lose sight of, you know, what's really happening to the currency, because you sort of get used to it. It's people outside the country that understand better what's actually happening within the country, because, you know, in Europe you don't have to hold dollars, or if you're in Asia you don't have to hold dollars, and if you don't like what's going on in the States, you dump those dollars, and that's basically what China is saying, for example.
Yes.
So you know, when a currency collapses, the demand for the currency collapses first outside the country. Only within the country does the currency collapse, the demand fall, but that's at a later stage.
Yeah.
Once the signs are clearly there. You know, turning to the global aspect, what are the big factors in your view affecting, you know, the global monetary and economic scene today? Is it China still?
Yes, China is extremely important today and will be long term, but China cannot exist in isolation when the rest of the world collapses, which I think it will do, into this hyperinflationary scenario, starting with the US. And China will suffer because they are totally dependent today on their exports. Long term, hopefully they'll be building up their domestic economy, but that is long term, and before that they're going to have problems. And one must just hope that that won't lead to any social disorder or problems within the country when there will be these pressures, because we know that the banking system is massively inflated in China also.
You know, there's this talk about global cooperation, you know, trying to find additional reserve currencies or minimizing the role of the dollar as a world reserve currency. And at the surface, the discussion between various governments seems to be cordial. But behind the scenes, would you think that China is probably considering or possibly considering going its own way, creating a currency backed by gold?
I think a few countries are, and I'm sure China is also, because I mean, China is one of the few countries that is actually thinking about what's happening in the world and planning for it, both when it comes to sound money and when it comes to investing their money in the right places, buying resources and investing in countries with resources. And I don't know what they are planning, but I know that they are certainly thinking more than anyone else about the role of gold. Can they do it in isolation? Yeah, they could do.
Mm. You know, it seems to me that China is building a commercial empire. They're, you know, globally. You know, they're using their foreign exchange reserves to buy resources in Africa, to try to buy companies. You saw Barrick competing with Minmetals, I guess it was, to buy Equinox, the copper company. Yes. And you know, one of the reasons that the British Empire was successful as a commercial empire was that the term British pound and gold were synonymous with one another.
Yes.
So I'm sort of wondering whether China, you know, sees that aspect, and to build a successful global commercial empire, they're ultimately moving that way too.
I'm sure that that's what they would like to. Before that, in my view, gold has to be revalued substantially to function as money, and I think it will be.
You want to give us a target? You know, I'm on record as 8,000 by 2013 to 2015 for an ounce of gold. And I'm sticking to that, although I think maybe it's probably going to be conservative given what's happening to the dollar. But what's your longer term view?
Well, it's a very good question, that, because I'm also on record for saying that between 6,000 and 12,000. But I add in today's money, and I think now I'm going to change my mind about this, because it is not worthwhile any longer to talk about today's money, because we're not going to have today's money. Nobody's going to see today's money. We are going to see hyperinflationary money. So to talk about 6,000 or 12,000 is meaningless, because what people have to protect themselves against is gold at 100 million or 100 billion or 100 trillion. We have no idea how many series there will be, because we have no idea how much money will be printed. But it's not likely to be less, bearing in mind the massive exposure of the world economy. Just take the derivatives of 1 quadrillion outstanding, which most of them are worthless. So the money that has to be printed is probably more than we've ever seen in a similar situation. And therefore, it's impossible to say how many series there will be. But people must think in terms not of the fact that gold might go up 3 or 4 times from here, but the fact that they might lose all of their money because they haven't got it in a safe currency. Mm-hmm. And I think, therefore, you know, it's impossible to give a forecast what gold is going to be. But it's not going to be 10,000 or 12,000 in my view. It's going to have a lot of zeros after it in today's money.
Will gold basically then reemerge as the form of international money, which is its traditional and classical role? Or is it already
there are 2 stages.
Money?
Initially, we'll do it because that's the only, you know, even in Zimbabwe, for example, you know, they paid for the daily, I mean, they found gold in the rivers and paid for their bread in gold, as you know. So initially, it will be a trading currency before the system is reorganized, which could take a very long time. I hope gold will be part of a future reserve currency, and it's my view that it should be. But before governments agree on that worldwide, that could take many, many years. What's your view on that?
Well, I think gold is already emerging as a form of international money. I mean, we see it in terms of people going to gold as the safe haven, and even talk in the general mainstream media that, you know, gold is emerging once again as a form of international money.
Yeah.
I think given the bad experience that people are having with paper currencies, fiat currencies, on both sides of the Atlantic, as well as other currencies around the world, that it's inevitable that gold goes back to its rightful role. After all, gold has, as you very well know, 5,000 years of history, and the attributes that made gold as money in the first place have not been lost. All that's changed is people's perceptions over the past few decades. People have been taught to believe that gold is not money, that paper is as good as gold, etc. Those perceptions have changed, but the attributes that made gold money in the first place have not. And I think what we're seeing now is this relearning of what gold's attributes are. And as more and more people start to understand that, these higher gold prices that we've been talking about seem inevitable as people move out of paper, move out of fiat currency into a safe haven, which is gold, what gold offers. Tangible asset, doesn't have counterparty risk, and preserves purchasing power over long periods of time, which makes it an ideal form of money, and in fact, which is why it became money in the first place, chosen by the market. Anything that you'd like to add as we wrap up our little discussion here? Any particular comments or advice for the people who are going to be viewing this video?
Well, the pressure on gold now will be twofold. One is the collapsing currencies. And then we talked about the dollar, but also every other currency will also go down, maybe not at the same speed, but they will do. So that's one pressure. The other pressure is combined with the fact that gold will go up just because currencies are going down, you have the pressure of that only 1% of world financial assets are in gold today. And in spite of that, gold has gone up 5, 6 times, depending on the currency, in the last 11 years, and which is quite amazing that you've actually seen a stealth market where gold has gone up so much without anybody owning it. All right, gold money has seen a major increase. We've seen very good increases in investment, but that's nothing compared to world financial assets. And you're seeing now the first signs of people now becoming more desperate. People want to buy gold now, but it's still a very, very small percentage. But when major funds and major asset managers and major pension funds start buying gold, as we both know, and they will also buy physical gold because they won't trust the paper market, which they shouldn't anyway. And when that starts, there won't be the gold around, and even the gold that they say is there won't be there because central banks will not have the gold that they say they have, and it'll be lent out, etc. And therefore, the pressure on the price will be enormous. And this is what's going to move gold so fast.
So you're a firm believer, along with me and a number of other people, that you really want to own physical gold and not paper gold?
People must have physical gold. I think that they must have it outside the banking system. And they must have it in their own name. They must know that the gold is actually there. And in my view, one shouldn't store it at home because I think that's a bad thing. So your system or our system is absolutely the right way of doing it.
Well, Egon, thank you very much. This is a real pleasure. I've been speaking with Egon van Greyerz, the founder of Matterhorn Asset Management in Switzerland. Thank you very much.
Thank you, Jim. Thank you.